Hello, folks. Welcome back. Today, we're going to tackle an important question, a question that I think is on the minds of a lot of real estate investors. Is it still a good time to invest in Toronto real estate? Well, I still go by the old adage that it's time in the market as opposed to timing the market. Sure, people could get lucky waiting for a crash or, buying at the dip if there is one. Will these rising mortgage rates cause a crash? Will it just cause a slowing of the growth? Will it be temporary and things will go back into hyperdrive? I don't have a crystal ball. I don't think anybody does. So I think the question is at any given time, whether we're in a high interest rate environment, whether it's a buyer's market, seller's market, to try to find something that makes sense from the numbers and buying and staying in for the long term. I think that's where true wealth is made and not on these short-term flips, which is almost like gambling in a sense. Sure, you can get lucky, but most times you could get burned. So let's look at an actual example here. I've just searching on housesigma.com, I found something here that is listed actually currently at $449,000 in downtown Toronto for a small bachelor. Now, if we can, especially with this type of market where there's not as many offers, if we can potentially get this rental property for $437,000 and amortize it over 30 years, even at a variable rate, let's say of 3.45%. Now, I'm being conservative in that mortgage rate because I'm anticipating, let's say, another 0.5% on June 1st or even 0.75, or if they do 0.5 and then they do another 0.25. So that's why I'm using basically the expected prime within a few months from now minus 0.5, just to be extra conservative. I'm also making an assumption here of putting 30% down because, again, if you're putting 20 or 25% at these prices and these rates nowadays, it's going to be hard to break even. It doesn't necessarily mean it's a bad investment just because you have to put down a little bit more money. Again, the question is what investment are you comfortable in, and what investment is going to be able to give you a little bit of leverage safely to make some money over the long term. And I still believe that real estate is the place to be over the long run. So here we've got a deposit of 30% down. And as we can see here, factoring in the mortgage payment, including the principal and interest, property tax, maintenance costs, which is the condo fees, and the rental income that is fetched in that area, again, just using the same website, looking at what similar units have rented out for. We've got 1,800, subtract all these expenses, and we get essentially a cash flow neutral scenario here. So again, for me, it's long-term. It's all about long-term capital appreciation, especially in this market. This is not a cash flow play, but at the same time, you don't want to be dishing out hundreds of dollars out of your pocket each month. So we can see how this scenario so far looks feasible. Now, over time, as we make the payments and collect the rent, let's watch what happens. So let's say we keep this property for, let's say, this full 30 years. This essentially means that the mortgage is completely paid off after 30 years, and this property is going to be owned free and clear. Let's also make the assumption that the real estate property, in this case, this condo, is going to appreciate at a 5% rate. Now, just to put that in perspective, long-term appreciation of real estate in Toronto and the GTA has exceeded this. So I'm using 5%, again, to be a little bit more conservative. Now, if we look at that and we say, okay, here's the 437,000 starting now for 30 years at 5% interest rate, we can see that that will turn into 1,888,000. So let's call it roughly 1.9 million. So you're going to own in 30 years this $1.9 million asset with a zero mortgage because you've got a 30-year amortization, and now you own it free and clear. And essentially you've been using the renter's money that the renter has been paying you to pay this off over time. Now, what kind of return is that? So again, here we can see that the $131,100 that we invested on that $437,000 condo, which is the 30% of that, has grown into about $1.9 million after 30 years. So talk about just one action, one thing changing your life and being a game changer. Never mind if you had two or three, but just one. Think about that. So for that 30 years, the total ROI, which is a return on investment, is 1,340%. So again, you cannot count the return on investment on the 437,000 because you didn't put down 437,000. You put down 30% of that, which is roughly 130K. So again, you're using leverage because the growth is on the full value of the asset, but you've put down much less. So that's the power of leverage. So if you annualize this 1,340% return over the 30 years, just using this simple online investment calculator, your return on investment, ROI, is 9.3% annually. And for me, some people might be thinking, okay, well, that doesn't seem that huge. Well, let's keep in mind, people are happy with a 6-7% return annually. Not to mention that, if you put it in a GIC currently, what are you going to make on that? Maybe a couple of percent. You can put it in the stock market. Sometimes that could be a bit of a gamble. For me, I personally feel safe to own something real as opposed to, for example, individual stocks where they have a bad quarter of earnings and then the stock tanks, 20%. For me, having something real and tangible, something that's been proven over the long term, such as real estate, allows me to sleep better at night. So again, it's not for everybody, and I'm not saying don't invest in stocks and bonds. I think that people should have a balanced portfolio and have, don't put all your eggs in one basket. But for me, I think real estate is a very powerful tool that's been proven that allows for some leverage to build long-term wealth. If you found any value in this video, I appreciate a thumbs up and a subscribe. And again, wishing you health, happiness, and prosperity. All the best.